Hi guys! So, have you heard the big news? The United States and China just inked a brand new trade deal. And trust me, this is not just political fluff. This thing is a game changer, whether you're a shopper on Amazon, a business owner, an investor, or just someone trying to figure out why your favorite gadgets keep getting more expensive. This deal matters. In this video, we're going to break it all down. Don't worry, I promise to keep it simple, fun, and super relevant. We'll talk about what's actually in the new trade deal, what it means for tariffs on Chinese goods, how this could affect your shopping cart, why American companies might be packing up and heading elsewhere, and yes, will countries like Vietnam, Mexico, or the Philippines be the next China? So let's dive in. Before we get into the new trade deal, let's rewind a bit. This US and China haven't exactly been best friends over the last few years when it comes to trade. Remember the trade war? Yep, that was a real thing, and it got messy. It all started around 2018 when the US slapped heavy tariffs on Chinese imports, basically a tax that made Chinese goods more expensive for Americans to buy. So in response, China hit back with its own tariffs on US goods like soybeans and cars. And the result? Higher prices, slower trade, nervous businesses, confused consumers, and a whole lot of political finger pointing. So fast forward to now, which is 2025, the world has changed a lot, and both countries need each other. China is still the world's factory, and the US is still one of the biggest markets. So the leaders sat down, negotiated, probably with lots of coffee and translators, and finally came up with a new agreement. But what's in it and why does it matter? Okay, so here's the juicy part. The deal, signed in early 2025, is being called Phase 2 by some experts, an upgrade from the earlier Phase 1 deal of 2020. Here are the highlights in plain English. Number 1. Tariff rollbacks. Oh, finally, some relief. The US has agreed to roll back some of the heavy tariffs imposed during the trade war. That means certain goods like electronics, furniture, clothes, and toys will get cheaper. Not all tariffs are gone, but many are being reduced or frozen. Second is China opens up more of its market. China agreed to let more US companies operate freely inside China. That includes finance, insurance, and even technology. It's like opening up the velvet rope to a VIP section, obviously for American businesses. Third is better protection for intellectual property. This has always been a sore spot. US companies complained that China let copycats steal their ideas. This deal promises stricter rules to prevent that. Fourth is more imports from the US. China will buy more American goods, everything from aircraft to agricultural products like soybeans and corn. Farmers in the Midwest are cheering. Fifth is digital trade and e-commerce improvements. Both countries agreed to fairer digital trade rules, and which is important in a world where everything from groceries to gadgets is sold online. Sounds pretty good, right? But don't get too comfy yet. What does it mean for tariffs on Chinese goods? Let's zoom in on the one thing you've probably wondering about. Will stuff from China get cheaper now? The short answer, yes, but not across the board. Some tariffs are being lifted or reduced especially on consumer electronics, tools, home goods, and apparel. That means your iPhone might not go up in price this year, but good news, right? But here's the catch. Not all tariffs are going away. The US is keeping some of them in place, partly to use as leverage if, things go south again. So while prices might drop a bit, don't expect a shopping bonanza just yet. And companies, they're still wary because what if another trade war starts in a few years? So many of them are already making backup plans. Is China still the world's factory? Let's get real. China has been the world's go-to factory for decades, from smartphones to sneakers. If it has a barcode, chances are it was made in China. But over the past few years, things have been changing. Labor in China is getting more expensive. Political tensions are rising. COVID-19 taught the world how risky it is to depend on one country for everything. Enter the great manufacturing shift. American companies are looking elsewhere, to countries with cheaper labor, friendlier policies, and less geopolitical risk. So, who is in the running to be the next China? Who could be the next China? Let's all meet the candidates, shall we? Let's take a quick world tour of countries that might become the next big manufacturing hub for the US. First up is Vietnam. The pros for this country is that it's close to China, it has cheap labor, and it has a growing infrastructure. The cons, however, it has a smaller population and limited resources. In reality, big companies like Apple and Nike are already shifting production in Vietnam. Second country is India. Pros here is that it has a huge workforce. It is an English-speaking country, and it's also improving the tech sector. The cons? There's still a lot of red tape, power outages, and infrastructure is still catching up. In reality, it is promising, but not quite plug and play yet. The third runner-up is Mexico. The pros for this one is that it's right next to the US. Low shipping costs, and it has NAFTA or USMCA benefits. The cons for this one though, for this country, is that it has a high crime rate. It has political instability in some regions, and in reality, they're great for cars, appliances, and some electronics. The fourth candidate is Philippines. The pros for this country is that it's English speaking, it has a young workforce, and it has a cultural affinity with the US. For the cons though, the infrastructure needs work and it's prone to natural disasters. In reality, it's already big in services like call centers, now trying to grow on the manufacturing side. The next one is Indonesia, Bangladesh, and Thailand. So the pros for this one is that it has a massive labor pools and very low wages. For cons, infrastructure, high in corruption, and also political hurdles. In reality, it's great for textiles, but scaling up tech production is still a bit tricky. So, will any of these countries fully replace China? Probably not, at least not anytime soon. But together, they could actually chip away at China's manufacturing dominance. This is called China Plus One strategy, wherein companies don't want to leave China entirely, but they want a backup plan. And that's where the third world and developing nations get their big break. So what does this mean for the US economy and you, my friend? Let's zoom in again. How does this affect all your day-to-day life? First, it can lower the prices, maybe. Tariff relief could bring some prices down, such as electronics, tools, clothes, maybe even some groceries. But not a huge drop, but a little help counts. Second is more American jobs, eventually. If US companies manufacture in places like Mexico or the Philippines, they might reshore some jobs too, like logistics, sales, and product development. Next is it has more global stability. A healthy US-China relationship means fewer market freakouts and more predictable prices. That is good news for investors. What is still uncertain is that the deal is a step forward, but it's not a magic fix. Trade tensions could flare again. Political winds shift fast, especially in an election year. Now let's get a little philosophical. This deal is not just about tariffs. It's about power. China wants to be a global superpower. The US wants to stay as the number one. Trade is one of the ways they wrestle for influence. This deal is a sign that they both realize that fighting all the time isn't helping anyone. But it also shows how the world is changing. No single country will dominate forever. Manufacturing is going global. Power is shifting. And if you're in a country like Vietnam, the Philippines, or even Kenya or Bangladesh, this could be your moment. The factories are coming. The jobs are coming. And the investments are coming. For the US, it means diversification, not putting all of its eggs in one Chinese-made basket. So final thoughts to sum it all up. The new US-China trade deal is a big win for stability. Tariffs are going down, but not disappearing. Your Amazon cart might be cheaper soon. Companies are spreading manufacturing to countries like Vietnam, Mexico, and the Philippines. And while China's not going anywhere, the age of made in China is slowly becoming made everywhere. The world is changing, and this deal is just the beginning. If you're watching from the US, keep an eye on where your products come from. If you're in a developing country, this could be your economic boom. And if you're an investor, this is a space you'll want to watch very closely. So, what do you think? Is this the start of a new era in global trade? Do you believe the Philippines or Vietnam could really replace China as the go-to for manufacturing? Drop your thoughts below. Hit like if you learned something new. And don't forget to subscribe for more conversations about how global economics affects you. Until next time, stay curious, stay informed, and stay global. Ciao!